We talk about AI daily here at the New York Stock Exchange, and here to break down key trends in the area are the co-founders of TickerTake, Caroline Lesley and John Erlichman, husband and wife. Welcome to the New York Stock Exchange.
Thank you so much, Ashley. It's great to see you. Thanks so much for having us.
So great to have you here. So first of all, let's talk about TickerTake. You aim to make financial news easy to understand, accessible. Can you talk a little bit about your business model?
John spent years on regular television, and we saw that there was kind of a hole in the market where everybody was talking inside baseball, and we wanted to make it informative, fun, digestible for all the ages, and also just newcomers to Canada, the US, people that just want to start investing and they don't know what a PE ratio is. So that was how TickerTake was born. John left legacy television and we started a YouTube channel. We also do TikTok, Instagram, and a newsletter, a Substack newsletter.
Absolutely.
And here we are.
It's been a lot of fun. It's great because there's never been more interest in the markets than there is today. And I think in part because technology is making all of this more accessible. You mentioned, AI, like everybody knows that not only is the story of Apple as a company, but there's the stock story as well, because people learn about this on their phones. So it's a great place to talk more with people about the investing story, the landscape, and it's been pretty exciting for us.
And even Gen Z is getting into investing. What has your TikTok engagement been like with younger consumers?
Well, so we started using TikTok back during the pandemic. I was still working in traditional television, broadcasting from home because we couldn't be in the studio. And that was when I first played around with TikTok. I asked Caroline, what do people do on TikTok? And she said, well, they do a lot of dancing and pointing, John. So I literally just started to try to take some of the information that, I would use in my reporting and find newer ways of telling stories. And there was definitely a way to connect there. And it is true that on TikTok, there is a new generation of investors, on average, younger investors. We do tend to get an audience that is younger. But I think everyone is on social media and everyone is curious about investing. And so you get great questions there from people. They keep you honest on things they want to know about or what you're talking about. And it's exciting.
And our daughter is 15, and she was one of the big people that said, get on TikTok, start dancing, do your pointing. And so I just wanted to give her a shout out because she is in that generation.
That's right.
And she has started investing. So they are interested in what we're doing. My dad actually gave them a little bit of money and said, start investing early, play around. So you wrote an article about that. Do your stock market homework.
When it comes to money issues, they matter to everybody. And these days, especially, and this is true with the younger generation as well, affordability. Am I going to be able to buy a home? And yet, when you're going through school, you don't always get the tools and the tips you need to make the smartest money decisions. Why is that? So, for us, financial literacy and advocating for that, and helping people to understand the markets is so important. Do we want to talk about, all the big trends that are out there that everybody's interested in as an investor? Absolutely. But do we want to start at the beginning as well? Yes, because unfortunately, a lot of people aren't always given the opportunity to learn those fundamentals, which, as we know, the success stories that emerge here at the New York Stock Exchange, these are important. These are important for people being successful, being financially independent. So that's a real passion point for us.
And if someone who is 15 or maybe even someone older who hasn't had that financial literacy support, what is a good way for them, besides watching TickerTake, to learn about investing and get involved in the markets?
You're starting to see a little bit more in school. But there's so many online resources that people can tap into, and just to start asking questions. And, maybe there's a way to have more of a family discussion. I'm glad Caroline brought up the point of her dad saying to his grandkids, I want you guys to at least get into the mix here. Learn what it's like to invest, because I didn't have that opportunity myself. And actually, on a similar note, these days, as you know, there's so many different ways to just test out the markets. Paper trading contests, right? Where you don't actually have to do real investing, but you can be in a very real way committed to trying out investing. So many different platforms are offering that. So with a click of a button, you can get started pretty quickly.
Yeah, that's exactly what I was going to say, the paper trading thing. So you can just play around and see how it's going to go for you. Also, just bringing it into the school, the education programs, I think should be a bigger part of what's happening. And they actually just introduced in Canada a high school credit for financial literacy. So I think that's amazing. It's a great start.
Speaking of investing, there are a lot of dollars going into the AI space. What is your take on this space right now?
Well, we ask a lot of our guests about the AI story, and I would say that it does feel like we are in a bubble, but the question is, what kind of bubble are we in? Are we in a bubble that is going to pop, or is it like when you're blowing a bubble with your gum and it might deflate a little bit after, a big, round, juicy moment? I think everybody's asking that question right now. The challenge is that what makes this different, in my opinion, from, let's say, the most comparable bubble that we hear people talk about, which is the internet boom. At that time, there were all these bricks being laid for the foundation of things like e-commerce. So we had to sort of predict what that internet footprint was going to look like. And then in a lot of ways, they overbuilt. Whereas today, you have most of the money coming from these big technology companies. They might scale back a little bit on that. But when they're able to invest and then roll out product right away and then generate returns on that investment and then tell their investors about it on conference calls, that's a different situation. And that's one of the things I think is exciting investors, is that not only is there this big new opportunity, but there is a way to tangibly see how money's being made so far. But obviously valuations are pretty big too, so that jury is out, I suppose.
And it seems like the funding is feeding into each other, such as NVIDIA's huge investment in OpenAI, and these companies are all like investing in each other. Do you have any take on what's going on there?
Totally see what you're talking about. The fact that there is a very familiar feel of where the money is going. At the same time, a lot of those companies are the ones that are required to do this build out. We did a video recently about the so-called hyperscalers, the Microsofts, the Alphabets, the Amazons of the world, who are oftentimes partnering with the NVIDIAs of the world to do this big build out. But I guess without their build out, would you be able to see all these AI tools that they're able to, put out into the world? What do you think, Caroline?
Yeah, like Nebius just did the deal with Microsoft.
Yeah.
But I like to look at it in buckets. So like how they all kind of feed into each other. So you have like the designers and the architects, NVIDIA, AMD. Then you have the manufacturers, which, there's Samsung, but like I would argue that Taiwan Semi is really leading the charge with that one. And then you look at the memory, which the GPUs wouldn't operate without the memory. And I really love, we talked about this recently, the Korean company SK Hynix. And then you have like the GPUs that get so hot and the data centers get so hot, and you have the cooling systems and you have Vertiv Holdings. And so there's so many, I get really excited about the tech and the AI stuff because there's all these buckets and these avenues. And then we had Kevin O'Leary on our show last week, and he was talking about the whole the real estate and the land, because you're going to need the land for the data centers and the warehouses. And so, there's Brookfield infrastructure. And he was talking about buying land in Alberta because you're going to need this land for all these. So there's just so many different avenues that feed into each other within the AI space that I think the bubble is not bursting anytime soon.
It's an ecosystem. Yeah. It's definitely an ecosystem. And Caroline, are there any AI stocks that you are keeping an eye on?
One that I didn't mention is a Canadian stock out of Saskatchewan, Cameco, and it's the uranium play. Because of the electricity, we're going to need the uranium to power all of this. So that's one that comes to mind that is a favorite.
We did another video recently where we didn't just talk about those hyperscalers, which we referenced, or the chip companies, but what would be that next building block through AI? Here at the New York Stock Exchange, you have all of this data, which is so valuable to any of these AI tools that are out there. And so a lot of data companies are going to be worth watching in the next few years because, the one thing that people often find fault with is, can I trust in this information that I'm getting back from the AI? So if you're already a reliable data provider, your service is probably going to be in high demand over the next few years.
And gold has been the breakout star, although it did have a sharp sell-off recently.
Yeah.
But do you think AI will outpace?
Gold and AI are having a moment for different reasons, obviously. And we spoke to one of our guests on Ticker Take about this recently, who feels like gold did have a tumble from its best levels, but that we are still in a bull market. And that if you look at gold performance through history, you've seen a lot of moments like this in terms of the charts. And I think the bigger questions, that have fueled gold, do people want to hold as many US dollars? Are we concerned about inflation hanging around for a long time, or governments spending too much and that putting economies in troubling places, or geopolitical matters? I mean, none of that has changed, even though gold came off its peak. So I think the people who are bullish on gold would still feel that way. I think for gold investors, though, one of the takeaways we've gotten from some of the guests we've spoken with is that you still want to look for companies that are able to produce gold at reasonable prices versus where it is today, because that's going to help your profitability, that they're steady cash flow returners. That could be a helping hand. And that same guest actually talked about in tech, given the run-up we've seen, that he would like to, this is David Burrows, he's with Barometer Capital Management, one of our guests. He was talking about how, he would be relying on cash flow heavy tech companies in the same way that he'd be, leaning into the cash flow heavy gold companies. It's almost like a little bit of security after the run up that we've seen. At least, these companies know how to make money, and that gives them a little bit of a moat in their business.
John Erlichman and Caroline Lesley from Ticker Take, thank you so much for joining us at the New York Stock Exchange.
Thank you so much, Ashley.
Thank you so much for having us.
Thank you.